TechTurns.com. TechTurns.com.
What's up, y'all? What's going on? Welcome back to the Wealth Giant Academy. It's Stock Tuesday talk, man. Stock Talk Tuesday day. Ain't no Taco Tuesday because the stock market is tripping. So I ain't buying no tacos today. But check it out, y'all. I just want y'all to not panic, concentrate, think about investing, think about what investment means. Don't mean get rich overnight. This ain't one of those type things. But I just want to basically speak, man, because I'm in the red too. And I'm going to show y'all my portfolio in a minute. I'm down like 3%, which is about like equivalent to a little over $600 on my account right now. That's not good. But one thing I know for sure, a lot of the stocks that I read now are going to blow up eventually. We got to understand something. We just came off of 2020, basically. I mean, I know it's April, almost May. But 2020, it was easy to make money in the stock market. I made a lot of money out of 2020, especially at the end. Even though it was COVID, was rampaging, everybody made a lot of money that was invested in stocks in 2020. 2021, because 2020 was basically a bullish market. So we're basically coming off of a bullish market, and now we're kind of like in a bearish realities type market. We're seeing what it can do and what it can't do. Now this is where you just, you suck it in and you do your thing. A lot of people say, well, should I be buying a dip? It's not always a great idea. And I say this in my Facebook groups. I say it on my social media because you see a lot of people all the time. Well, the stock market is on sale. Buy the dip. Buying a dip is not the default button. There's certain things, even with good stocks, even with stocks like a lot of my EV stocks, a lot of my tech stocks, that are down right now, I don't just go crazy and buying the dip. Even though I know with some of these particular stocks, I know they're gonna bounce back. But just buying the dip, you should have a moderate or at least rule for yourself when to stop buying the dip. Don't just keep buying the dip and using up all your money. Then you read for another 3, 4, 5 weeks because you don't bought the dip some more. When you could have just invested in some more, like I always say, you could have took that dry money you had, what we call dry powder, and you could have took that and put it in something, a more dividend stock or a bigger growth stock that's been green, because a lot of my stocks are still green, been green for the last 3, 4 weeks. So like I say, it's about using strategy with the stock market too. Don't just keep buying the dip on everything. Keep buying the dip on the stock and it's steady red every day. Then you get mad and upset and nervous because you keep seeing it in the red. So it's a technique that is good for certain things in certain times. So I don't just tell you to keep pouncing on something just because it's lower and you got to average down your costs, and average down your costs is good. But there's also a thing, and I have to keep stressing this, called dollar cost averaging. Dollar cost averaging is actually riding a good stock, especially dividend stocks, riding the stock up. And ain't nothing wrong with buying a stock while it's going up. Nothing wrong with that. But I would say, I mean, of course, averaging down on your costs is much better because what you bought a stock at, you keep buying a certain dip, it'll average down. But in a time like this, I would advise a lot of you to just stop trying to buy the dip and just sit back, man. Just put your feet up and watch it. It's gonna come back. But I want to talk about 2 particular stocks today. And I wanted to mention something else before I even get up into it. And the 2 stocks I'm going to talk about, basically ChargePoint, ticker CHPT, and NIO. Everybody been talking about NIO, ticker symbol NIO. These are basically EVs. The thing about it, though, and before I get off into these 2 particular EVs, and there are other EVs and other things I want to talk about, but before I get off into it, I want to just say a lot of us that's already deep into the tech stocks. Let me explain something to you about tech stocks. Like Apple is one of the few tech stocks that's still been green. I'm talking it's like at 134 something, doing wonderful. But I just want to explain something about tech stocks. Tech stocks and bond yields go hand in hand. And I've said this before in groups, If bond yields are high, then tech stocks are usually low, and vice versa. When the tech stocks are basically blowing up, I mean the bond yields are low. So don't worry about the tech stock, your tech stocks. They're going to bounce back. Believe me, they're going to bounce back because tech is futuristic, just like EVs is futuristic. Um, Certain SPACs. Um, I don't usually get off into SPACs or really invest my money into SPACs, but I'm gonna tell you some SPAC companies, SBAC. But I'm going to say at this particular time, a lot of my EVs, and now I'm going to go off into Charge Point and NIO. I know they look low now, they look bad, but I'm going to tell you something. I think you should look at these particular stocks as futuristic. That's going to get you paid. Now, before I even go any further, I am not your financial advisor. I am not a financial advisor, period. These particular stock videos that I make is purely for edutainment. Yes, that is a word. It's education and entertainment made a baby. So what I want y'all to understand though, a lot of these particular SPACs and the EV companies like ChargePoint, uh, NIO, they haven't even really shipped products yet. You know what I mean? So when you're talking about a futuristic time period for these stocks to blow up, you're talking about 2024, 2025, at least a 3-4 year, 5 year, 4 year, 3 to 4 year plan. And believe me, they're going to go because once they start, if you look at the price range, matter of fact, let me go to my board, just show y'all something. Well, this is my TD Ameritrade account. Oh yeah, as y'all see, I'm down $642 on the day. Let me show y'all all this damn bread. Y'all see all that blood. It's crazy. All that blood. You know what I mean? So I'm down with y'all. So believe that. You know, you got very few green. My AT&T, like I say, my Apple, I'm curious. Very, very little green here. Coinbase even down. BNG, I mean, it's very little green. You see all this red. You know what I mean? So think about it. We're not gonna sweat that. You know what I'm saying? Because, like I say, we understand that this thing gonna pop around. I just want to show y'all something though. Y'all see, I already had it on ticker symbol NIO. Right now, man. You know, like I said, I'm not your financial advisor, but I'm telling you, this right now under $37, NIO is a steal because it's going to be big in the next 2-3 years. Probably in the next year, I would have to say. Not even in the next 2-3 years. NIO is going to grow at least. A lot of analysts, and let me repeat this again. Like I always say, I always talk about how I even average down on my analysts. I use Yahoo Finance. I use Zacks.com. I use StockInvest.us. Yahoo Finance being one of my favorite. I also use Tip Ranks. I use Bar Chart. But I never just use one. I always use all of these particular uh, stock analysts. I use Google. I use Bloomberg News. But I never just use one. I always use so I can get me basically a good flat average on what stocks I feel like is good. You know what I mean? I use these different analyst companies to actually give me a good rolling average. So right now I'm on Yahoo Finance, but like I said, I just don't use Yahoo Finance. So I don't want y'all to think every time y'all see my video, y'all see me using Yahoo Finance. I use a lot of different people. Like I said, Tip Ranks, Bar Chart, StockInvest.us, uh, Zacks. So Bloomberg News, Barron is a lot of different people I go to look into, and like I say, sometimes just simply Google. You know what I mean? But as y'all see, I'm telling y'all right now, NIO, man, this is a great stock. You see the analysts on it. I'm on the analyst part. This is what Yahoo's saying. You go down to the. Let me get back to it. Or did I pass it? You look at the analysts right here on the side. They got it in between buying holds of 2.3, and you see from January, February, March, April, no sales on it. Even though it ain't even took off yet, but you see you don't see no sale recommendations at all. From January, you see strong buy at the top, 15, 18. You got strong buy. You see the colorization, which represents buy. You do have the yellow and the underperform on the hip, but you see at the top on each one, even January to April, you still got strong buy and buy for this, according to Yahoo Finance. So this is a company to look out for and to don't give up on. If you got NIO, keep it. I'm not telling you to buy the dip on it, but I think anything under $37 is great for NIO. Let me go back to let me show y'all this other one, Charge Point. Let's go to Charge Point right now. And I really think this is a steal too. Right now, Charge Point holders at $19.95. The analysts are saying right now for Charge Point, they expect Charge Point to actually grow over the next 4 years, 75, 80% plus. So you're saying in the next 4 years, 770 times 4 is 280%. But really, it's going to be bigger than that. So you think if you buy a Charge Point now under $20, what it's going to look like in 2024, 2025? And that's just a small analyst opinion of where they think Charge Point going to grow, because EV it ain't going nowhere, just like Bitcoin ain't going nowhere. Cryptocurrency ain't going nowhere. EV and chargers for these particular cars, these electric chargers, is the future, period. It ain't going away. We're getting away from our old ways of the 80s and the 90s and the 2000s. So as investors, we got to think like that. We got to think about the future. It's like going back and people having a vision when they invested in Amazon when it was a penny stock. These people had a particular vision. They understood that the mail was going to change some kind of way. They had a vision of how the mailing system was not just going to stay the same as it was in the 90s and the 80s and so forth. And these people are multimillionaires now because look what Amazon stock did. So it's the same thing with EV, the same thing with these particular companies, with these energy companies, with these EV companies, well, EV companies in particular. This is the future, y'all. So I know you see it now. It's real low. It's in the red. Been in the red for the last 4-5 weeks, like everybody else. But Charge Point Holdings is a company that's going to blow, right along with NIO. And I'm telling y'all to jump on the bandwagon. Like I say, I'm not your financial advisor, but I'm telling y'all this is the move, and it's going to be big. You know what I mean? I think it's going to be big. And like I say, man. And there's other things I have on my list that I like. Those that I haven't really even bought yet. Um, well, I got that. I got Capital Southwest. I love Capital Southwest. But as far as dividend stocks that I tell y'all about, I got Iron Mountain. I got that on my list. But NIO, I'm still watching that, and I just bought some of that. And I'm gonna tell y'all something else too. Believe it or not, um, Tesla. Tesla just ran into some issues because someone just died. And shout out to the family of those two gentlemen that died. But I think when it comes out, and I just bought a couple of shares of Tesla. I think Tesla under $700, and I know everybody can't afford that. But anything under, but like I say, you go to stock slices, and I told y'all about stock slices on Charles Schwab. You don't have to go buy a whole share. You can just go buy slices of a particular stock, or do Amazon or whatever if you can't afford a whole share. But I'm gonna tell you something about Tesla. Like I say, these two gentlemen died, but uh, I think when it comes out that they were not behind the steering wheel, they was trying to use this particular technology of just driving without using the steering wheel. But I think when that comes out, Tesla stock going to jump back up. But right now they got hit because of that. But like I say, condolences goes out to the family. But let me say this, people, for those who got Teslas and who have bought Teslas. Don't try to do that. Don't try to drive your Tesla in the back seat or on the side. That technology is not actually done yet. It's still going through a phase. So don't use that technology in your Tesla. So that's what just made Tesla stock go down, because these gentlemen died. Like I said, condolences to their family. But that technology is not all the way right yet. So don't do that. Drive your Tesla like a regular car. Like once again, yeah, these are the stocks that I have faith in. So NIO and Charge Point, those are the number 2 ones on my focus right now. So I think they're going to do great. They're going to do great. So Just if you haven't hit the subscribe button, make sure you hit the subscribe button below and hit the bell for notifications. I'm the Wealth Giant, and I'll see y'all on the next video.